Did you know that most Americans who retire wealthy don't just save their money? They use tax-free investment strategies to multiply it. If you're not leveraging a Roth IRA correctly, you could be leaving hundreds of thousands of dollars on the table. A Roth IRA isn't just another retirement account. It's a powerful wealth-building tool that lets you grow your investments tax-free and withdraw them in retirement without paying a dime to the IRS. But here's the catch. Most people either don't open one soon enough or they misuse it, missing out on decades of tax-free compounding. Let's make sure that's not you. Imagine two investors, Mia and Jake. Both put away $6,000 a year into retirement accounts starting at age 25. Mia chooses a Roth IRA, while Jake sticks with a traditional 401k. At retirement, both accounts have grown to over $1 million. But here's the difference. Jake still owes the IRS a chunk of his savings, while Mia gets to keep every penny. That's the power of tax-free growth. So how do you maximize your Roth IRA? First, open one as early as possible. The longer your money compounds tax-free, the more you'll have in retirement. Next, contribute up to the annual limit, currently $7,000 if you're under 50, or $8,000 if you're 50 or older. And if you earn too much to qualify, there's a legal workaround called the Backdoor Roth IRA that high-income earners use to take advantage of these tax benefits. But what should you invest in? Many people make the mistake of using a Roth IRA as a glorified savings account. Instead, focus on growth-oriented investments like index funds, ETFs, or high-quality stocks. Since withdrawals are tax-free, the goal is to let your investments grow as much as possible before you start pulling money out. And here's where strategy really matters. Unlike traditional retirement accounts, a Roth IRA has no required minimum distributions, meaning you're not forced to withdraw money at a certain age. This makes it an incredible tool for estate planning, allowing you to pass down tax-free wealth to your heirs. Now, let's clear up a common misconception. Can you access your Roth IRA money early? Yes, but with conditions. You can withdraw your contributions, not earnings, anytime, tax and penalty free. That means if you've been investing for years and an emergency comes up, you have a built-in safety net. But withdrawing earnings before age 59.5 can trigger taxes and penalties, unless you qualify for exceptions like a first-time home purchase or education expenses. And here's a pro tip. If you're planning for early retirement, a Roth IRA conversion ladder lets you legally access your money before age 59.5 without penalties, just by rolling over funds from a traditional IRA and waiting 5 years before withdrawing. The bottom line, a Roth IRA isn't just about retirement, it's about financial freedom. Every dollar you invest today grows tax-free, creating a future where you keep more of your money instead of handing it over to Uncle Sam. Before making any financial moves, always consult a certified financial professional to ensure you're using the right strategies for your situation. If this opened your eyes to new possibilities, you won't want to miss what's next. Stick around. Your future self will thank you.